Hello everyone, John A.G. here. Welcome back to my channel, Aurex. If you haven't yet, subscribe to my channel. In this channel, you will find the real information, the real market updates that everyone cannot and will not tell you. The mainstream financial media is bought and paid for, designed to keep you sedated while your pockets are picked. So please, subscribe to this channel. I love all of my subscribers for your unwavering support. And please watch this video till the very end, because YouTube will not push my videos to more people when I speak these uncomfortable truths. What we are discussing today is the autopsy of the middle class, and it is a message that the algorithms are designed to suppress. We are living through a financial massacre of unprecedented proportions, and the absolute most sickening part of this entire nightmare, it was entirely engineered. The retail investor, the everyday person who is systematically conditioned to invest, to save, to blindly trust the institutional system, has been led, step by step, straight into the slaughterhouse. Today, we are going to meticulously dissect the 2026 collapse. We are going to tear apart the anatomy of this $900 billion wealth wipeout, exposing exactly how the global elites orchestrated their own exit, and most importantly, how you and your family can survive the agonizing, protracted aftermath of what happens next. To truly comprehend the waking nightmare of 2026, we have to rewind the clock and look back at the beautiful, intoxicating, meticulously crafted lie of the preceding years. Think back to 2024 and 2025. What was the narrative shoved down our throats every single time we turned on a screen? We were fed a diet of invincible economic resilience. We were told by suited men sitting in central banks that they had successfully engineered the impossible, quote, soft landing. We were promised that the beast of inflation had been slain, that the artificial intelligence revolution was going to create a perpetual motion machine of endless corporate earnings, and that the markets had entered a permanently high plateau. It was a psychological operation of the highest order. Wall Street built the ultimate frictionless casino, and they threw the doors wide open to the public. They introduced zero-commission trading to make you think the service was free, hiding the fact that you were the product. They pushed fractional shares so that even the poorest among us could gamble their grocery money. They gamified the user interfaces of their applications, showering the screen in digital confetti every time a retail investor bought a dangerous, highly leveraged financial derivative. They made risking your family's future feel identical to playing a video game on your phone. They handed out margin accounts like candy to children. They normalized the mass retail use of zero-day-to-expiry options, the infamous zero DTEs, turning the bedrock of global capital allocation into a high-frequency slot machine where a teacher or a construction worker could double their life savings or face total financial ruin by 4 o'clock in the afternoon. The financial establishment desperately needed exit liquidity. They needed someone to buy their overvalued bags, and they found that liquidity in the pockets of the working class. The cultural narratives they pushed were overwhelmingly powerful and aggressively manipulative. Buy the dip. Stocks only go up. Have fun staying poor. Don't miss out on the greatest wealth generation event of our lifetimes. Retail investors, already suffocating under the crushing weight of stagnant wages, soaring rent, and a cost of living that was silently destroying their purchasing power, were desperate for a lifeline. They poured everything they had, every spare dollar, every drop of equity, into the markets. They bought the hype. They bought the absolute top. They bought the illusion. But beneath the glittering surface of the stock market indices, the tectonic plates of the global macroeconomic system were fracturing under unimaginable pressure. Commercial real estate was quietly, violently imploding, hollowed out by the permanent structural shift to remote work and the suffocating burden of the highest interest rates in a generation. Regional banks across the globe, holding trillions of dollars in toxic, underwater commercial debt on their balance sheets, were entirely zombified. They were walking corpses, kept alive only by opaque emergency central bank lending facilities that were silently being stretched to their absolute breaking point. Simultaneously, sovereign debt was spiraling out of the realm of mathematics and into the realm of pure fiction. The United States government, along with nations across Europe and Asia, was spending over $1 trillion a year just to service the interest on its borrowing. Not paying down the principal, just paying the interest. The system was a powder keg soaked in gasoline, sitting in a room full of people playing with matches, completely oblivious to the fumes they were inhaling. And then came the trigger. It was never going to be one single isolated event. It was a rapid, cascading confluence of catastrophes, a perfect, inescapable mathematical storm. In late April of 2026, the first domino fell with a deafening crack. The sovereign debt crisis in Europe, which had been papered over for over a decade, finally reached its absolute boiling point. Bond vigilantes woke up from their slumber, demanding higher yields that insolvent governments simply could not pay. This triggered a massive, panicked flight to the perceived safety of the US dollar. But instead of providing a safe harbor, this sudden dollar wrecking ball shattered global supply chains and completely pulverized emerging market currencies. As the geopolitical tectonic plates shifted, the artificial intelligence bubble, the great monolithic savior of the S&P 500, popped with a ferocity that left seasoned institutional traders speechless. Companies that had been trading at 80, 90, 100 times their actual earnings. Companies that promised to revolutionize the fabric of human existence but failed to produce actual, sustainable, bottom-line cash flows, suddenly saw their valuations slashed by 60, 70, and 80% in a matter of trading sessions. The narrative broke, and when the narrative breaks in a hyper-financialized system, gravity takes over. But the institutional unwinding, the hedge funds losing billions, that is only half the story. What happened to the retail investor during this collapse was a specialized, surgical form of brutality. When the institutional selling commenced, the market algorithms, the cold, soulless, mathematically precise machines that now control upwards of 80% of all daily trading volume, stepped in. Algorithms do not feel fear. They do not feel pity. They do not see the human beings behind the accounts. They only recognize momentum, and the momentum was pointing straight down into the abyss. As asset prices entered freefall, millions of retail margin accounts were instantaneously flagged. If you had borrowed even a fraction of money from your broker to buy stocks, your account was suddenly completely underwater. And in the technological reality of 2026, the brokers didn't have the decency to pick up the phone and call you. They didn't give you a grace period of 3 days to deposit more cash to save your positions. The automated algorithmic risk management systems engaged in instant, merciless, forced liquidations. Across the globe, millions of retail accounts were liquidated simultaneously. Selling begat more selling, which triggered more margin calls, which triggered more selling. It was a catastrophic algorithmic death spiral, a black hole of liquidity that consumed everything in its path. And in the midst of this carnage, the very platforms that had gamified investing, the apps that sent you push notifications to buy more, suddenly experienced convenient technical difficulties. The buy buttons vanished, the servers went down, you couldn't log in, you couldn't hedge your bets, you couldn't initiate a transfer, you were locked inside a burning building with the exits welded shut, forced to sit there and watch your family's entire net worth evaporate tick by excruciating tick, powerless to stop the bleeding. I want to step away from the charts, the algorithms, and the macroeconomic theory for a minute. I need to talk about the human beings behind that $900 billion number, because I promise you the financial media will not. They will invite talking heads in expensive suits to discuss market corrections, healthy pullbacks, and liquidity events. They use clinical, sterilized, psychopathic language to mask the profound human suffering that is unfolding across the globe right at this very second. Let me tell you about a man named David. David is 58 years old, a master machinist from Ohio. He worked double shifts for 32 years. He destroyed his lower back, he destroyed his knees, and he missed countless family dinners to build a retirement nest egg of $400,000. David was not a gambler. He was a deeply conservative man who trusted the system. He trusted his fiduciary financial advisor. In 2024, his advisor told him inflation was eating his cash and instructed him to rotate heavily into high-yield dividend ETFs and so-called blue-chip technology stocks, assuring him they were bulletproof, foundational assets. Over the last 2 weeks, David logged into his portal and watched $250,000 of his life's physical labor vanish into the digital ether. His retirement is gone. The math no longer works. He is currently looking at his wife across the kitchen table, feeling a deep, suffocating sense of failure, wondering how he will ever look her in the eye and tell her that they are going to have to sell the home they raised their children in just to survive their twilight years. Or let me tell you about Sarah, a 28-year-old pediatric nurse in London. She was desperate to buy a small flat to escape the soul-crushing trap of infinite renting and predatory landlords. She saved aggressively, denying herself vacations, eating cheap processed food, living like a monk in her 20s. She managed to scrape together a £60,000 down payment. Listening to the chorus of financial influencers on TikTok and YouTube who mocked people for holding cash, she put it all into leveraged index funds. She thought she was being smart. She thought she was getting ahead of the inflation curve. During the catastrophic volatile swings of the 2026 crash, her leveraged ETFs experienced a volatility decay so severe, so mathematically punishing, that her £60,000 was reduced to £4,000 in less than 48 hours. 10 years of savings, 10 years of 12-hour nursing shifts, wiped out over a weekend. These are not isolated anecdotes. Multiply David and Sarah by tens of millions of people across the United States, Europe, Africa, and Asia. These are the real faces of the $900 billion wipeout. It is a mass psychological trauma that will scar an entire generation. It is a total, irreversible loss of faith in the social contract. It is a loss of dignity, a loss of agency, and a loss of hope. When wealth is destroyed at this magnitude, exclusively at the retail level, it causes a dark, insidious ripple effect through the very fabric of society. It leads to severe clinical depression, to broken marriages, to skyrocketing substance abuse, and to a silent epidemic of despair that no government unemployment statistic will ever accurately measure or care to report. And here is the ultimate, sickening, blood-boiling truth of the 2026 collapse. Wealth of this magnitude is never truly destroyed. It is merely transferred. While the retail investor was being locked out of their accounts, while the middle class was being subjected to the ruthless efficiency of automated margin calls, what exactly were the institutions doing? What were the mega hedge funds, the designated market makers, and the political insiders doing? They were front-running the collapse. The data is already leaking out, and the picture it paints is one of absolute treason against the working class. We now know that in the agonizing weeks leading up to this catastrophe, corporate insiders and C-suite executives dumped billions of dollars of their own company stock at the exact top. Politicians, who sit on classified intelligence and economic committees with access to real-time, non-public data, quietly and systematically liquidated their portfolios while smiling for the cameras and telling the public the economy was strong. The massive hedge funds, armed with high-frequency trading algorithms and the secrecy of dark pools, actively shorted the very same assets they were publicly appearing on financial networks, telling the retail crowd to buy. They built the trap, they baited it with the dazzling illusion of prosperity and the fear of missing out. And when the retail investors were fully loaded, leveraged up, and maximally exposed, the institutions pulled the floor out from under them. And when the dust finally settles, when the metaphorical blood is washed from the streets of the financial districts, these exact same institutions, sitting on mountains of hoarded cash and dry powder, will step out of the shadows and buy up the assets of the middle class for absolute pennies on the dollar. They will buy David's foreclosed home to turn it into a corporate rental. They will buy the bankrupt small businesses that couldn't survive the credit freeze. They will buy the liquidated equities at rock-bottom valuations. This was not a tragic accident of free market capitalism. This was a systematic, highly coordinated, ruthlessly executed harvesting of middle-class wealth. It is the implementation of modern-day techno-feudalism. They have stripped the retail investor of their capital, and by doing so, they have stripped them of their autonomy, ensuring that the masses remain dependent, indebted, renting, and utterly compliant for decades to come. So, where does that leave us? Here we are, standing in the smoldering ashes of May 2026. The damage has been done. The $900 billion is gone, transferred to the offshore accounts of the ruling class, and it is not coming back. The central banks are entirely trapped. They cannot print their way out of this collapse without instantly triggering Weimar-style hyperinflation, and the sovereign governments are too paralyzed by their own insurmountable debt to offer any meaningful bailouts to the working class. The cavalry is not coming. If you are watching this and you have lost heavily, if you are staring at a screen right now feeling a sense of absolute dread, I need you to hear me right now. Look at me. Listen to my voice. Do not let this break your spirit. I know the suffocating darkness you are feeling. I know the shame, the burning anger, the sickening hollow pit in your stomach when you check your bank account and see a fraction of what was there last month. You feel like you failed your family. You feel like you made a catastrophic mistake. But you must understand this fundamental truth. The game was rigged against you from the very moment you sat down at the table. You were playing three-dimensional chess against an opponent who could literally change the rules of how the pieces move whenever they started losing. You are not stupid. You are a casualty of the greatest financially engineered wealth extraction trap in modern human history. Give yourself permission to grieve the loss. It is real and it hurts. But do not unpack your bags and live in that grief. We absolutely do not have the luxury of giving up. The world is changing violently and rapidly, and we must adapt right now, or we will be swept away completely by the current of this new economic reality. The era of blind, unquestioning trust in paper wealth, digital digits on a screen, and central bank promises is officially over. The 2026 collapse marks the definitive, violent end of the everything bubble. Moving forward into the late 2020s and the 2030s, the rules of wealth preservation and generation are going to look entirely, fundamentally different than they did in the last decade. We are entering a harsh new era of tangible assets, of localized resilience, and of extreme financial defensive posturing. First and foremost, we must decouple ourselves from the hyper-financialized, derivative-laden system. The stock market is no longer a barometer of economic health. It is a weaponized instrument of wealth extraction. The retail investor must radically pivot from chasing phantom yield in digital casinos to securing physical, counterparty-free assets. I am talking about real money. I am talking about precious metals, physical gold and physical silver, which have served as the ultimate undefeated hedge against central bank insanity and fiat currency collapse for 5,000 years of human history. As governments inevitably attempt to inflate away their insurmountable debts, causing the purchasing power of your local currency to plummet, holding physical metal outside the traditional banking system is no longer a fringe, doomsday prepper idea. It is a fundamental, urgent necessity for basic financial survival. Second, you must recognize that the true currency of the future is not going to be dollars or euros or even digital tokens. The true, undeniable currency of the coming decade will be energy, food production, and irreplaceable human skills. Look at the fracturing geopolitical landscape. The global supply chain breaks that began years ago are now permanent, widening chasms. Nations are aggressively hoarding resources. The globalist model of hyper-efficient, just-in-time delivery is dead and buried. If you want to survive the brutal years ahead, you need to invest heavily in your own sovereign infrastructure. If you have the means, own the physical land you live on. Invest in your ability to produce and secure your own necessities, rather than merely being an endless consumer reliant on fragile corporate supply chains. But most importantly, more than gold, more than land, you need to invest in your own human capital. The massive tech layoffs and the aggressive AI integrations of the mid-2020s proved beyond a shadow of a doubt that white-collar, laptop-class jobs are just as fragile, if not more so, than blue-collar labor. The people who will genuinely thrive in the post-2026 economy are the tangible problem solvers. The mechanics who can fix aging machinery, the electricians who understand power grids, the civil engineers, the medical professionals who can heal without complex hospital infrastructure, the agricultural specialists who know how to pull calories from the earth. You need to develop skills that cannot be printed out of thin air by a corrupt central bank and cannot be instantly erased by a glitching algorithmic trading bot. We must also radically commit to rebuilding our local, physical communities. When the macroeconomic system fails us from the top down, the microeconomic system is the only safety net we have left. Build real, tangible networks with your neighbors. Establish local barter systems, organize community food cooperatives, engage in mutual defense, and practice localized mutual aid. The financial elites want us isolated, depressed, staring at our screens, feeling completely helpless, divided, and alone. True rebellion in 2026 is turning to your neighbor, looking them in the eye, shaking their hand, and making a commitment that you are going to get through this storm together. There is a profound, albeit agonizingly painful, silver lining to this collapse. The massive, destructive fire of 2026 is finally burning away the economic rot. It is destroying the gross malinvestment. It is clearing out the zombie corporations that produce nothing of value, and it is incinerating the parasitic financial derivatives that added absolutely zero tangible value to human existence. We are standing right now, battered and bruised, at the absolute base of a new economic paradigm. The path upward will be incredibly steep. It will be undeniably harder than the illusion we just left behind. It will require physical grit, sweat equity, and a level of deep financial literacy that we previously lazily outsourced to Wall Street algorithms and financial advisors. But the wealth we build from these ashes will be real. The phantom wealth is gone, but the true wealth, our physical land, our hard labor, our intellect, our community, our spirit, remains entirely intact. We have an unprecedented opportunity right now to step outside the matrix and build a parallel economy. An economy fundamentally based on sound money, honest labor, and tangible production. They wiped out $900 billion of our paper wealth. They stole our digital savings. They delayed our retirements and stole our peace of mind. But they absolutely cannot steal our resilience. They cannot liquidate our minds, and they cannot margin call our human spirit. To every single person watching this video right now, you are exponentially stronger than your portfolio balance. You are vastly more valuable than a red ticker symbol flashing on a screen. The road ahead of us is going to be incredibly difficult. The next few years will severely test the fabric of our societies. We will see massive political upheaval, we will see severe currency crises, and we will experience ongoing systemic shocks. But humanity has survived worse odds, and we will survive this. And we will emerge on the other side, battle-scarred, but fully awake. Never again will we blindly hand the keys of our financial future over to the architects of our own destruction. Knowledge is the ultimate, unconfiscatable asset. That is exactly why I created Aurex. That is why I sit here in this studio, week after week, meticulously analyzing the data, cutting through the thick fog of state propaganda, and bringing you the unfiltered, unapologetic truth. I am not just a narrator standing on the sidelines watching our economic demise. I am walking this dark path with you, side by side, as we figure out exactly how to rebuild our lives. If this message resonated with you today, if you feel that fire of defiance waking up inside your chest, please, I urgently ask you to share this video. Send it to your family, your friends, to anyone who lost money in this crash and doesn't understand why or how it happened. The algorithms will absolutely try to suppress this narrative, but we are the algorithm now. We are the network. Hit the like button. Subscribe to Aurex. Turn on the notification bell so you never miss an update, because the flow of vital, truthful information is going to be the absolute difference between thriving and merely surviving in the months and years to come. I love you all. Stay incredibly strong. Stay perpetually vigilant. Protect your families, protect your hard assets, and never, ever surrender your mind to their fear. My name is John A.G., this is Aurex, and I will see you in the next video. John holds a steady, piercing, unbroken gaze with the camera for 3 long seconds. The weight of his words hangs in the air. Fade to black. A low, powerful, resonant cinematic bass drop echoes out, leaving a lingering hum of tension and unbreakable resolve. Text slowly fades onto the screen. Aurex. Seek truth. Build wealth. Survive. Subscribe.